In this video, I'm going to be breaking down what is property investing and what is deal packaging and what do I prefer, which I'm going to be breaking down by the end of today's video. So first of all, comparing property investing versus deal packaging is a little bit vague. So let's narrow down property investing as investing in properties as an asset class. Now the reason I'm saying that's a bit vague is it could be buy-to-let, service accommodation, HMO, industrial, commercial conversions, land, development, whatever it is. And then deal packaging also is pretty vague. So it could be packaging buy-to-lets, packaging land, packaging HMOs, packaging lease. You get my point. So let's keep it simple by saying investing in a buy-to-let or deal packaging a buy-to-let. Now I typically don't really like comparing the two, and here's why. One is an active income stream and one is a passive income stream. So it's kind of like going, do you like apples or do you like bacon? It's like, I mean, they're both food, kind of, but very different. If you're a vegetarian, we're gonna have a very different conversation, right? But the point is, when you're looking at an active income stream, you're looking at active income, you're looking at an active business, and they're very different to a passive income stream. So a passive income stream is amazing for residual, almost passive income. And I say almost passive because nothing is truly passive. There's still stuff that you'll need to do. But you invest once, you set and forget it. Okay, so you put in the time, you put in the energy, you get the asset class and it's there. Now, there's a lot of pros with that, but there's a lot of downsides as well. There's ongoing liability, for example. You'll typically get 8% plus returns. The reason I say plus is obviously you've got capital growth, rental increases and things like that that can actually end up in some double-digit returns over time. But in general, let's call it 8% plus, and then capital growth might be closer to 20% plus, which is an amazing return. The downside is you do need to raise some money for this. So, you know, you might end up needing, if you're in Leeds or Yorkshire where I am, 40 grand for the deposit fees, etc., all in. Maybe sometimes up to 50,000. If you're in London, obviously quite a lot more. But you're needed to raise that capital. So can you do it if you are a beginner and you don't have your own money? Well, yes, you can utilize other people's finance in order to fund your deals. But if you are new to property, it is quite difficult in order to get them to trust in you. Also, if you're buying and building your own portfolio and you refinance and you haven't got enough to pay them back, what's your exit? How are you doing that if you don't have it? Whereas deal packaging, I love, and I'm very biased because I teach deal packaging. I've got to do a pretty big deal packaging business right now. But the reason I really like it and the active income is it's big chunks of money and quite quick. Now, property, nothing in property is get rich quick, but it is a nice chunk of cash that's going to be coming in where I might invest in my marketing or my training where I might get a 500% return within about an 8 to 12 week time frame. It's like, well, that's a crazy return. Yes, it is, but that's why you shouldn't really compare active income to passive income, because deal packaging is a business that you are constantly going to be putting time into. For example, I might make 10 grand from a fee, but then it's done. The person that bought that property from me is going to get their few £100s a month every single month for the rest of their, I was going to say their life, but the life of they've had that investment. Whereas I then need to go out and work again. So it's not ideal if you are looking to quit your job and not do anything. But are you really looking for that? A lot of property people, I find this baffling. They're trying to work really hard in property to get out of their job to then get into property to get out of property. But for me, I actually love the active income. I love property. I'm passionate about this. And so which do I prefer? Neither. I don't have a preference. They're completely different. And if you want to know my strategy, I'll tell you right now. I will typically package on 5 properties and then use the money to purchase the 6th. So we're trying to buy around 5 a month right now to build the portfolio. And I package on, you know, between 30 and maybe 40 properties a month as well. So I'll get 6 properties. And they're all very similar, you know, I've got very similar criteria to my investors. I'm a big believer in packaging on what I would buy myself, but obviously I can't buy everything. Then I'll package on that and I'll buy the 6th. I'll package 5, buy the 6th, package 5, buy the 6th. And this way I am funding all of my passive investments with my active income stream. Now, when it comes to the strategies, I like packaging boring vanilla buy-to-lets, and I like buying boring vanilla buy-to-lets. And the reason for that is I like my active income to be as simple as possible, but active and earn good, repeatable, continuous chunks of money. And then I like my passive income streams to remain passive. And I personally believe a good way of keeping it truly passive is keeping it boring, vanilla buy-to-lets. But that doesn't mean I'm right, by the way. Of course, the great thing about an opinion is everyone has one. And whilst it's good for you to hear mine, I'd love to hear yours. So what do you prefer? Deal packaging, buy-to-lets, or any other strategy out there? Let me know in the comments. I'll try to reply to as many as possible. And it would help me tremendously if you hit that like button on the way out. And if you're new to the channel and you want to learn more about deal packaging and other property investment strategies, make sure to hit the subscribe button and the notification bell. And I'll see you in the next video.